So, yesterday was one of those market days where everything looked calm on the surface, but you could feel the tension building underneath. Hey everyone, it's Wednesday morning, December 10th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. Now, U.S. equities had a mixed session as the Federal Reserve's December meeting kicked off. The Standard & Poor's 500 finished just below flat, while the Nasdaq actually turned around midday and closed slightly positive, up about 0.1%. The Dow, on the other hand, slipped around 0.4%, mostly because shares of a big bank dropped after an executive said costs will rise next year due to tighter competition in credit cards and more spending on artificial intelligence. So, the market actually gained some momentum in the morning after job openings unexpectedly ticked higher in October. But before anyone gets too optimistic, layoffs also increased. So labor conditions are still sending mixed signals. Everyone is now watching the Fed's final policy decision of the year, coming later today. Markets are almost fully convinced we'll get another quarter-point rate cut, matching September and October, with odds near 90%. But here's the real question traders care about. Will 2026 bring more cuts, or will the Fed return to its hawkish tone? Experts are saying the Fed is unlikely to give any roadmap beyond the next few months, and pressure is coming in from all sides. A senior White House advisor called it irresponsible to outline easing plans too far ahead, and the president suggested he wants the next Fed chair to cut immediately. So, policy tone could get louder, not calmer. 10-year Treasury yields climbed again, hitting their highest levels in more than 2 months. The broader bond market saw similar moves, reflecting nerves ahead of the decision. In corporate news, a major artificial intelligence chipmaker slipped slightly after the president approved partial shipments of its latest chip line to China. And earnings later this week from Oracle, Broadcom, Costco, and Lululemon may give us fresh insight into big-cap tech and consumer spending trends. So, that's where we stand. All eyes on the Fed today, and tomorrow might look very different. Alright, that wraps up today's Capital Markets Quickie. Join me again tomorrow morning for more market updates. See you then.